I'm Robert Abbott. I'm the CEO of the New Hampshire Society of CPAs. Nina's going to do the introduction, our board chair, Nina Chang, but I just want to remind people to keep your cameras off unless you're speaking, and then also make sure you keep your mic muted because we can hear you in the background as well. We will have a protocol for questions. Just type them into chat, and if they're related to the speaker of the time, we'll ask at the end of their session. Everybody's got about 15 minutes. If it's more of a general question, I'll pose them at the end. Sound good? So go ahead, Nina, why don't we get this kicked off? Good morning.
Good morning, everybody. Welcome to our first ever Zoom virtual town hall meeting. My name is Nina Chang. I'm the current chair of the board for the society. We have today a panel including Joel Olbricht, who is our AICPA board member and New Hampshire State Liaison. We have, let's see, Lindsey Stepp with us today, who's a commissioner of the New Hampshire DRA, and later, who I think Teresa will be joining us, I hope, and she's the president of Devine Strategies and the Society's legislative advocate. So, Lindsey, do you want to go first and give us an update on what the DRA is up to?
Sure, I'd be happy to. Good morning, everybody. As Nina mentioned, Lindsey Stepp, commissioner at the New Hampshire Department of Revenue Administration. So as I'm sure you can all imagine, the past few months have felt like a lifetime and has been quite a challenge for all of us. So today I just wanted to go over the impact of COVID on the DRA, keep you updated on kind of what our operations look like, and then also share some good news about our new Revenue Information Management System, or RIMS as we call it, which there is going live at the beginning of October. So just to start, for those of you that routinely interact with the department, our building in Concord is open and has remained open throughout the pandemic. We do ask, obviously, that if you're not feeling well, please don't come visit us. And if you do come into the building, please wear a mask. But again, we are open and we have employees here. Our call center is also operating as usual. We are split between some employees working from the building here, and then obviously the majority of our employees are working from home. But again, fully functional in terms of coming into the building or accessing our call center. As I mentioned, most of our employees are working from home. This was quite the transition for us. We are not typically an operation that does a lot of remote work other than auditing at a client site. So we made the very quick pivoted transition to remote working. The staff has been phenomenal. Everyone transitioned very well. Productivity remains the same. And so I'm really proud of the work that we've done. It's been pretty seamless for the most part. Again, bumps in the road here and there, but generally pretty seamless. Our audit and collections activities had slowed during the pandemic, but we are starting to resume those activities while obviously keeping in mind that we are still in the middle of a pandemic and it presents various challenges. But we do have our statutory obligations to collect the proper amount of taxes due, and so we take that seriously, and we are starting to resume audit and collections activities. So you may see us out and about or start hearing from us. In terms of specific COVID impacts, the first I wanted to mention is the TIR 2020-001, which is the guidance that extended the due date for most taxpayers from April 15th to June 15th. We worked closely with the society on executing that extension, and we are hopeful that it was beneficial for many taxpayers. I will note we did have a significant number of taxpayers still follow the July 15th federal deadline. So I'll talk about our revenues a little bit later, but there was an impact to revenues because of that. So it seemed like there was still some confusion on the due date, but it looks like for the most part, generally that was a beneficial move for most taxpayers. Other COVID-specific things that the department has been working on, the Main Street Relief Fund and the Self-Employed Livelihood Fund. These were two programs that originated out of the Governor's Office for Relief and Recovery, or GOFR, as they are more commonly known. And Gopher is charged with overseeing the state's use of the CARES Act fund. So the $1.25 billion that New Hampshire received in the CARES Act, Gopher is charged with distributing that money. So both the Main Street Relief Fund and the Self-Employed Livelihood Fund were administered by DRA. We quickly set up an online application. We manned the call center during the full application period up until midnight for the Main Street Relief Fund deadline to answer questions. We processed all the appeals that came in, and then we are also processing and issuing the checks. It was quite an effort for all of us. It was a very quick time frame that we were working under, and as you can guess, we're used to collecting money, and these programs we were charged with handing out money. So we had to kind of shift our perspective and put on a different hat, which in some ways is easier. In other ways, we found it can be harder. So while these programs weren't necessarily on our list of things that we were going to do this spring and summer, we were able to utilize our RIMS system for the application portion of both of those programs. So it did give businesses a taste of what's to come and a flavor for how the application works. So I do think it was beneficial that we got the opportunity to participate in those programs. To date, for Main Street, we have issued $343.4 million in grants to 5,393 businesses. And for the Self-Employed Livelihood Fund, we have issued $39.8 million to 5,624 businesses. So again, these programs have been very successful, and we understand that they're making quite a difference to a lot of businesses. So we're happy to have been a part of that. Additional information for grant recipients is still in process and will be issued in the coming months regarding the reporting of their actual losses, because on their applications they needed to estimate their losses due to COVID. So the state will be looking for actual reporting of actual losses, and guidance will be issued on the potential need to repay any excess funds that businesses did receive. I don't have any more information on that at this point, but it is something that we are working on with the Gopher team, and as soon as we have something, we'll be sure to share it. The other thing related to state and federal relief related to COVID that I wanted to mention is that the DRA did issue a press release on August 18th about the taxability of state and federal aid. You can find it on our website. But in a nutshell, state and federal aid is taxable at the state level for BPT and BET purposes. So while PPP loans may be forgivable at the federal level, they are taxable at the state level. So check out that press release from August 18th, which is on our website for additional information. And I think I see that that is one of the questions in the chat. So Mark, feel free to contact me directly if you have additional questions once you take a look at that. Revenues. So we're the Department of Revenue, primarily charged with collecting about 80% of the state's education, trust fund, and general fund revenues. The pandemic has had an effect on revenues. Most of our revenue sources have been impacted in one way or another. So the state's fiscal year ended on June 30th, and the general fund and education trust fund revenues were $142.5 million, or 5.4% below plan on a cash basis. This is important, obviously, for a lot of reasons, because those are the funds that fund state government and state programs. But very specifically, there is a provision in law that if revenues are more than 6% below plan, then the business tax rates are due to increase on January 1, 2021. So we are just under the 6% threshold for increasing rates. However, the determination of that 6% is based on the state's comprehensive annual financial report, or the state's audited financials, which won't be available until December. So stay tuned. Like I said, on a cash basis, the business tax rates will not change. but there is a chance that after all the accounting adjustments are made and the final report is issued, that we could exceed that 6%. So the department, as well as various other units of state government, will be in contact and putting out information about that. If my gut feeling at this time, though, is that this business tax rates will not change, but don't quote me on that. For fiscal year 2021, which began on July 1st, revenues have been mixed. Business taxes and interest and dividends are currently ahead of plan, which is very surprising, although for the most part, this is due to taxpayers following the federal due date of July 15th. So we received more revenue in July based on that federal due date that the state did not follow, but taxpayers still did. So we received additional revenue in July that we were not necessarily anticipating. The meals and rentals tax is down about 25% of plan, which can be expected given the impact of COVID on restaurants and hotels. The bright light in the meals and rentals tax is fast food. Fast food remained a strong performer during the closures of other restaurants, and so that continues to perform well, but your typical restaurants and your dine-in restaurants and hotels obviously have seen a reduction in revenue and therefore a reduction in revenue to the state. Tobacco tax is performing ahead of plan. We had actually anticipated the tobacco tax would decrease. We've seen about a 4% reduction in that tax over the past few years. So the increase is a little bit unexpected. We believe that it's partially due to the fact that stressful situations like a pandemic don't necessarily lead themselves to a time when you may want to decrease or stop smoking. And also we think we're seeing some impacts on the prohibition of menthol cigarettes in Massachusetts. So we're seeing some increase in cross-border sales. The last tax that I wanted to note is our real estate transfer tax. This is also ahead of plan, thanks to people presumably looking to relocate to New Hampshire. The housing market is quite hot at the moment, primarily driven by home prices, which are up about 14%. The inventory is less than it's been in prior years, but the prices are higher. So the two kind of balance each other out in terms of our revenues. We will be keeping a close eye on the real estate market to better understand where the revenues may be headed, whether this is a little bit of a blip due to COVID. Maybe this will be more of a sustained increase in sales with people finally realizing that New Hampshire is a great place to live and wanting to move here. We also will need to look at the impact that commercial real estate may have on that tax as well, as businesses decide whether or not they want to remain in remote work situations for longer periods of time, whether they want to downsize their office space, that sort of thing. So both residential and commercial real estate are areas that we are focusing on. We are obviously only 3 months into the fiscal year, so there's a long way to go, and it's really tough to know where the fiscal year will end. But state agencies are putting together their budgets at the moment, anticipating that revenues will be lower than were originally planned. Last but not least, the good news. The DRA's Revenue Information Management System, or RIMS, which is our new back-end technology system. Hopefully everyone's heard of it, but if you have not, this is a new system that will be used by taxpayers, practitioners, and DRA staff. We received funding for this system of just over $30 million from the legislature in June of 2017, thanks to the CPA Society for their support in securing that funding. We had our first rollout on October 28th of last year, which included the meals and rentals tax, the nursing facility quality assessment, and the Medicaid enhancement tax. Now, less than a year later, with no delay due to COVID, which is unique, many other states were rolling out tax systems and many of them saw delays, but we did not. So less than a year later, we're going to go live on Monday, October 5th. With rollout 2, and rollout 2 will include both business taxes, the interest and dividends tax, and the communication services tax. So in advance of rollout, there are just a couple things that I wanted to cover with you. The first is, in order to get ready for go live, we will need to shut off our modernized e-file production services. So those will be shut down from September 25th through October 12th. This means that MEF submissions will not be processed during this time. So taxpayers may see a delay in their ACH payments being pulled from their accounts. After we turn MEF back on, once we've transitioned it into RIMS, all the pending submissions will process as of the submission date, and confirmation emails will be sent. So if you are doing MEF submissions between September 25th and October 12th, just know they're not going to process, and there won't be a confirmation email until after we turn the system back on the 13th. The other exciting thing about MEF and RIMS is that you will now have the ability to file estimates and extensions through MEF, and you will be able to warehouse payments and request ACH refunds. So yes, Joel, I knew you would be happy about that. We are finally getting fully functional with MEF, largely thanks to RIMS. If you run into any issues or have any questions about that MEF shutdown around go live, feel free to call into our call center. They are very well aware of what's going on. And the second thing I wanted to mention about RIMS is our online portal, which is called Granite Tax Connect, or GTC for short. And that portal allows taxpayers, but also practitioners and preparers, to see account information, file returns, make payments, etc. If you would like to have access to your client's account on GTC, I have a one-page summary, which I will send to Robin for distribution to the group. It walks you through what you'll need to do in order to request and be granted access. So in general, you will need some specific information from your clients. You'll need to know their tax liability in prior years, certain things like that. Once you successfully provide that information, we're going to mail a hard copy letter to your client, and you're going to need information from that letter to fully grant you access. So you can either have your client go in and do it if they're familiar with GTC based on the information on the letter, or they can provide you the information from the letter. But we do mail a hard copy letter, and this is to ensure security around the system and to make sure that all of the access that we're granting is fully authorized by your clients. And you can have different levels of access for different clients. So one client might say, I just want you to be able to see my account. You may have another client that says, I want you to basically fully act on my behalf within the system. And so you can have those different levels for different clients within the system. You'll be able to go in and kind of poke around. There's a lot of nice features where you can see what we call an accountant page, and it has a summary of all of your clients on one page. So you can see if anyone's late making filings, or a quick way to see everyone's status in one place. So a lot of exciting things to come with GTC and RIMS starting on October 5th. If you haven't, you can sign up to get emails on our website related to the project. So we did send out an email yesterday about the MEF shutdown, and we'll continue communicating in that way. You can also always reach out to me if you have any questions or issues while using GTC and RIMS, but we're really excited about it. We hope you are too, and we hope that everyone will find it to be a lovely change and a more modern Department of Revenue. So that is all that I had prepared, but I'm happy to answer any questions.
All right, thank you, Lindsey.
Welcome.
Teresa, are you there?
I am here. I am here. I think
Great.
I'm getting everything on. I must say, it's tough to follow Lindsey. You took out a lot of my thunder, my friend.
You know, Teresa, I specifically took out my legislative section.
Well, you can jump in.
I had to, and I said, no, Teresa will cover it. So.
Listen, you are good though. I had seen Mac Zellum, the budget director, yesterday, who did tell me about people filing July 31st instead of June 30th. But, and I will say I took away that New Hampshire, thanks to you and your department, it seems to be faring better than I think we expected at this point.
We are. Revenues are looking better than we expected. September in particular is coming in really well.
That's what I hear, yeah.
Which was a little bit surprising. So we'll be doing a little bit of a deeper dive into that revenue. Most of September revenue is obviously estimate payments. And I always joke with the legislature because they often ask, well, why did estimates go up? And I say, you know, the estimate form is about a half a sheet of paper. It's a name and identification number and a dollar amount. Unless the taxpayer adds a little love note to tell me why they're changing their estimated payments, I don't know necessarily until the final return is filed. So we'll do some analysis and see what we can kind of analyze and determine based on what we're seeing.
Right. Mac did say, and I'm not sure I totally understand this, that we are tracking for the budget for the biennium. We're tracking pretty much what you all estimated, not the adjusted numbers, which was astounding to me.
Yeah. Revenues they're just,
it's,
I guess
well,
if it's wrong, I'd rather be wrong in this direction.
Exactly.
You know,
No,
the revenues would be worse and have them come in better. So
you're exactly right. And I don't know about everybody on this call, but I have to tell you, there are so many businesses that I come into contact with daily that are having the best year they've ever had. And clearly some are hurting, particularly the restaurants and lodging. But I'm just astounded, even on the retail side, how many people are knocking it out of the ballpark, which is, and I'm sure you guys as CPAs know this better than I because you're your clients, but it's fascinating to me. Well, let me just give you a brief update. We all know what happened with COVID. We all know that the legislature pretty much shut down in March and April. And there were a few meetings in May, and then in June, things got busy and actually really quite busy to the point you couldn't really keep up for the month. And then we were done until veto day last week. Basically, what happened was the majority, and I wouldn't even say the majority, I'd say probably 80% of the bills that were filed for 2020 did not go forward. They either were just not voted on, which means nothing happens. They didn't cross over to the other body, which means nothing happened. Some of them got sent to interim study. What the Senate did was, and you had a little bit of a fight between the House Democrats and Republicans because the House Republicans said they wouldn't change the rules because they were mad that the House Democrats didn't consult them on how to change the rules and all that. It was like, frankly, playing in the sandbox. But so the House really took itself out of any serious discussion on issues or policy, because if you won't change the rules, nothing can go forward, because they had deadlines that were in the rules, and if bills weren't acted upon or they had hearings by those deadlines, they were done. So the Senate then in June ended up coming up with a number of bills that had passed the House that were in the Senate, and they added amendments on, and they added, well, I have to tell you, there's one bill that was 89 pages long and had, I think, 13 other bills on it. Another one was 100 and some pages long. So they just took everything they thought was important and threw it on these omnibus bills. Each committee was asked to list the 5 things that they needed to have passed. Senate took some of them, they didn't take some of them. It's really interesting to me. One subject that's always controversial is cannabis and legalization of marijuana. But there's a lot of legislation that comes forward every year on medical marijuana, et cetera. Not one medical marijuana legalization of cannabis bill went forward. It was just fascinating. And there were a lot of them that had passed the committees, And for some reason, they decided we're not going to deal with this. A lot of labor bills didn't move forward. There were a lot of labor bills that were ready to go. Not many moved forward. A lot of healthcare obviously did. On the tax side, guess what? None of the tax bills moved forward. Even the bills, Lindsey, you needed. There was one bill in there that you wanted for what I would call administrative technical reasons, didn't move forward. So it was really quite interesting. The Senate made the decisions. They had a lot of amendments that came in the session, which meant that people didn't even get to comment on them. So they would, on the floor of the Senate, say, oh, well, I want to add this. So it was a mess. As you can imagine, the governor vetoed a fair number of them. Some of them he vetoed just because of the process. Some of them he vetoed because he didn't like one or two of the bills that were added on. So we had veto day last week. All of the governor's vetoes were sustained. So we're done. We're totally done at the moment. I would say to you, what I hear is that no matter whether the Republicans or the Democrats win in November, that the Senate definitely, and the House too, is going to try to limit the number of bills. Normally they're anywhere from 1,100 to 1,300 bills introduced in any given year. Next year's a budget year. And I understand they're just saying, hey, we don't want these frivolous things. If 3 people are introducing the same bill, get together and work it out so we only have one. So my guess is we'll have about 700 bills. I think we'd like to have about 500 because you've got to, right now, it looks like all the hearings will be remote. I will tell you, as a paid lobbyist, a professional lobbyist, it is not great. Because I was on a hearing the other day and somebody said something, and it's not easy to participate as the audience. You can raise your hand. Sometimes they see you, sometimes they don't. They call on you. But there was something that came up on a hearing the other day, and honestly, I didn't understand what the committee member was saying. I wasn't sure what they were saying was right, but more importantly, I didn't understand it. Normally, what we lobbyists do is I'm not going to challenge the person publicly. I'm not going to raise my hand during the hearing and say, where'd you get that? You know, I don't understand it. I'd wait until the hearing was over. When they walk out of the room, I'd say, may I speak to you for a minute? I just not sure I understood what you meant by that. You can't do that when you're remote. So then you call them up and they can't remember what they said. And so it's, oh, well, this is really great. So it makes it really difficult to, what I would say, and I think Lindsey would agree with this, it makes it difficult to, shall I say, correct the record or make sure they understand really the implication of what they're saying, or what they, maybe what they're saying isn't 100% correct. And it's really hard to do that when you're remote. So, having said that, I'll just say it's going to be a really challenging winter because it looks like most of the hearings will be remote. I'm guessing they'll work 5 days a week, and there's rumor they'll even meet on Saturdays, because if you've got the number of committees you've got, right now the State House has limited access to Zoom. In fact, one commission I've been following the whole time is having to use a UNH Zoom account because they don't have enough state accounts. And I don't know, Lindsey, whether you know anything differently, if we're going to get more accounts, but so it's a little bit of a mess. The election, who knows? We've got 6 weeks. We'll see what happens. We could have a split Senate, 12-12. We could have a Democratic Senate. We could have a Republican Senate. House, I think, will stay Democratic. But let me just say, I never make the right predictions, so who knows? And I don't have a clue what's going to happen with the governor's race. I do think most people think Governor Sununu's done a really actually good job during COVID. And so, but Dan Feltus is running a tough campaign. So anybody's guess, and I think a lot of it depends on what happens nationally. So as of November 4th, then I will be calling Robin and say, okay, who do the CPAs have as friends who've now been newly elected? And we'll assess it and do the best we can. What do I expect for legislation next year? A lot of tax stuff. And I think if which I believe Lindsey's, the commissioner is correct, that the BET and BPT won't change, I think you'll certainly see an effort to get have those taxes increase. Capital gains will be back. Don't know what they'll do in interest and dividends taxes. They've been trying to raise the threshold. I think you'll certainly see a lot of tax credits, attempts to get rid of some of the tax credits that are there. I think you're going to see people trying to give DRA revenue in any way they can, even though it's a budget year. Normally in budget years, they don't change tax law because they don't want it to impact. It needs time to settle in, but it'll be very interesting to see what happens. I think you're going to see every tax imaginable on the books, income, sales tax. I think you're going to see fees. Any fee that's out there, particularly ones that nobody really pays any attention to, they're going to try to raise. So it will be interesting. And then we've got the budget. As I understand it, all the departments have been asked to submit a budget that's 20% below, whether that's the starting point or whether, who knows? It all depends on where the dollars are. There are some things out there they can do, and I don't know whether the commissioners heard about this. I mean, there's something called the reverse auction, or a dynamic reverse auction for the pharmacy benefit managers account that looks like it can save the state about $20 million a year. To my knowledge, they haven't started on that process. That certainly would be good money, to say the least, if they would move forward with this dynamic reverse auction, because every $20 million right now with programs being cut, it would be a help. I'm sure there are other things out there, but at some point, because at this point, as I understand it, they're not allowing, when somebody leaves, new hirings. So at some point, the government's going to have to add people in order to function. So it's going to be interesting. As far as real tax legislation, as I speak to you right now, the second of two single sales apportionment meetings are going on. It's going to be very interesting to see what happens there. I listened to the first one this morning, which was a committee that had been established quite a while back. It was a bipartisan committee and had some business people on it, that they've decided they're done with that. And the recommendation is going to be that possibly they submit legislation for next year, reinstituting this apportionment committee, depending on what happens with what the legislative apportionment committee, which is meeting right now, does with single sales. And as you all know, last year, 2020, the budget included New Hampshire conforming with the feds, instituting market-based apportionment, and instituting single sales factor apportionment, and they were staggered. This year, 2020, the House had a fit and said, you didn't consult us, and so they wanted to push single sales off, I think, to 2024. Well, that didn't happen because everything went to COVID. It'll be very interesting to see what they do on that, because as the budget is written, the legislative committee can make the decision whether to move forward or not with single sales. So I do have my assistant listening into that, so needless to say, you'll hear about that later. So that's kind of everything for me in a nutshell. It's an interesting, trying time, and clearly, as you all know, all of your clients have issues. I will say I've never been so busy, because people calling up saying, oh my God, what do I do about this? What do I do about that? But this seems to be the new normal for the moment. Any questions? I'm happy to take them. And Commissioner, jump in if I left anything out.
Well, I think you covered it.
Yeah. I say not much happened, but a lot happened.
So we do have a question from Mark about DRA having an estimate on the impact of PPP loan taxation.
Sure. So yeah, we don't actually have an estimate, and this kind of goes back to Mark's first question because so PPP money received via PPP is taxable for New Hampshire purposes, but depending on how it's spent or if it's spent, it may also be a deduction. So the net impact, therefore the taxability or the impact of revenues or bottom line taxability and impact of revenues is unknown at this point because it's tough to know how it would be spent. I mean, in order for it to be forgiven at the federal level, it would seem as though it would need to be spent on deductible expenses. But as Teresa mentioned, we are also hearing that businesses are doing better than they thought. And so some, especially not sure what is going to happen with a potential second wave. There are businesses that we're hearing about that are taking some of this aid money and holding it and not spending it because they're not sure what the future looks like. And maybe they'd rather pay a little bit of tax on it and have it for the future. So it is really tough to know. So at this point, we don't have an estimate on what we think the revenue impact would be from PPP or any of the other aid programs.
All right. Thanks, Teresa, for that update, and thanks, Lindsey, for that answer. Let's move on to Joel.
Howdy. So you've had a couple really good reports. I've liked what I've heard this morning. So this is good. We're having a good meeting here. I wanted to also bring up that I serve on the AICPA board, but I also serve as liaison to the Benevolent Fund. And I think it's something we should all know about. We all may know somebody in a firm or an employee or a CPA who's going through a really rough point in time in their life and they just need a little support, maybe monetarily, maybe a spouse was unemployed or, you know, rather than sustain real bad medical issues that they can't afford or houses repossessed. You should go on the AICPA website and look up the Benevolent Fund, and I think you'd find some good support there for people that you may know going through a rough patch. And that's exactly what the fund is for. And I kind of bring that up because it was a few months ago that Barry Melanson and the AICPA went through this thing called Project Human Signals. And if you look that up, it's a very interesting study that was done with EY. And it was a study around looking for new patterns of your employees. And we missed it on a few of ours. And the real interesting thing is, you know, you come out of COVID, you come out of your house, maybe you show up at the office for a quick meeting, and you can just tell from an employee or from somebody that something's different and that they're going through some kind of change that may not be healthy. And that's exactly what the Human Signals study was all about. And if you're seeing that in your workplace, there's some really good ideas in this human studies with EY that sort of brings up some good ways to help employees deal with it. So look that study up. It's very good, and don't be afraid of. We have the problem with the Benevolent Fund of people being embarrassed to put in for some money, but don't be, because it's very confidential and it's just meant to help employees through a point in time. So look that up. I wanted to go a little bit through the CPA evolution because I think you've probably all heard about it for a couple of years. And now that it's kind of getting set up to happen, I think it's kind of good to just refresh and know and hear the final details. So the whole topic behind this was the AICPA and NASBA trying to jointly come up with a new way for the exam to represent what CPAs really ought to know and have knowledge on. I'm going to try to get this line out of my face here. So they've changed the exam, and this is going to take place in 2024. So if you've got people you know that are getting ready for the exam, they know there's a change. So the exam now has a core, and the core is accounting, audit, tax, and technology. So technology is now a core part of the exam and a core part of what students should know, or anybody should know taking the exam. And then beyond the core, they can now also get sort of a specialty, or they can pick one of the other sidelights, which would be, you've got business analytics and reporting, you've got a different section on information systems and controls, and then one on tax compliance and planning. So you do the core, you pick one of the three specialized topics. Now, as I think everybody's looking at it, we've now got a certificate that is now updated. It includes technology, and it could also include now sort of a specialty within the CPA. So everybody still walks out with a CPA certificate. And that was one of the important parts of this whole evolution. But now you've got technology, and you've probably picked one of your key places that you want to specialize in. And now the exam has a little bit more meaning. It's more up to date. NHSCPA has agreed to it. And now the CPA exam itself will take place in 2024 with these additions. So just kind of keep knowing what's going on here. Let your future CPA students and employees know that that change will take place. You know, I think it's enough years that if you want to try to get your exam finished, you can certainly do that before 2024 shows up, and then have that out of the way. But I think it's very positive, and I've certainly been in a lot of meetings where we reviewed what was going on with the exam, why this was important for our profession, and I think this is the right thing at the right time. It also sort of sets now a benchmark for some real good inclusion that happened between AICPA and NHSCPA. So we've got a new base that we can go forward on if we want to make other further changes. So that's a real positive. I think the other real positive now is that now each of the states are going to be able to talk about this. They'll go to their state boards of accounting and now have discussions about how this affects the state role in the exam and the approval process of CPAs. So if anybody's got any questions there, we can go over that. I also have been included in a lot of discussions lately on .CPA. It's the new domain for CPAs and CPA firms. We've got one. So now instead of having to put CPA in your domain name would be, domain at .CPA. So no longer do you have to use .com. Now it's going to be .CPA. So it kind of eliminates having to put CPA in your name. And the great thing about it that I think the AICPA really is pushing is that if someone has that .CPA, it's been vetted. And we all know who those people are. They're licensed by the AICPA, and they only got that .CPA because they're a known member of the association. And that's a real positive. It kind of vets out anybody just getting a .com that looks like a CPA firm. There is a cost to it, and the less letters in your domain name, the more it'll cost you, because 2 or 3 letter domain names are pretty popular, and so they can certainly charge more for them. If you're putting your names in it, like Mark Berger, if it was going to be markberger.cpa, it probably wouldn't cost as much because there's probably not that many Mark Bergers in the world. So there's just a different pricing for what the possibilities are. The third or fourth thing here on my list was the town halls. If you haven't seen them, the AICPA is putting on a Thursday town hall, and it sort of started from what was happening in PPP, and now it's PPP forgiveness, and soon it'll be PPP2 as that program rolls out. But it's a great Thursday phone call at 3 o'clock. Get on AICPA in their CPE section. It's free. Sign up for it. Listen on. Robin also mentioned to me today that a few members recalled a PPP call we had just among New Hampshire Society members a few months ago, and we might try to pull one of those together now that it seems like we're getting to where banks may be wanting to see forgiveness applications now. So maybe we'll get a call here in the next few weeks, or I guess maybe the best thing is to wait till after October 15th. We'll put a call in place. I'll get Lisa and probably Carl on the call, and we'll just kind of go through it, because I think the way I'm structuring with my clients, I think somewhere around late October, we're going to try to file all the PPP applications that we've agreed and been engaged with clients to help them through that forgiveness process. Other than that, I think that's mine. I would certainly like to hear any suggestions or questions that you have on AICPA activities or anything else going on.
I have a question for Joel. Do you know if the AICPA has heard anything in relation to the federal government, how they're treating the PPP expenses yet as deductible instead of not deductible currently?
So that's an interesting question because Barry Melanson and I argue about that all the time. As we all know, IRS has ruled that, you know, any expenses paid from non-taxable income is non-deductible. And that's just a long-standing principle that that IRS is going to maintain. AICPA continues to maintain it as they look back at the legislative history of PPP. It was never intended to be that kind of a situation. You'd get the money tax-free, and you'd also get the deductions that were supported by it. But there appears to be, that I'm hearing on the Thursday calls too, there appears to be no language in a bill or anything coming up that's going to change that. So I've been kind of planning on all of our PPP forgiveness people to not have the deduction. So you know what it really is, it's kind of taxable income then, right? They should have just left it as taxable and then allow you to take your deductions. But I could just hear businesses going through being upset if they got PPP money, it was going to be taxable. So they had to call it non-taxable coming out of the program. Just for legislators not to hear from every person in town. So that's about all I know. The interesting thing that I think that we're starting to come up with all of our fiscal year ends, and we can talk about this more after October 15th, is how do you treat a year end of a June or a September? Is it a loan still on the balance sheet? Is it a grant? I guess there's some thoughts that you could treat your PPP money as a grant and move that into income for the parts that you've spent. So that's a pretty interesting discussion. I know we're all trying to go through that on GAAP too. What are you going to do? How are you going to book this on a GAAP set of books for a report you might be doing right now?
All right, guess we'll have to wait and see.
Yeah,
Thank you, Joel. So I'll give a quick update about the society and what we've been up to. During COVID, obviously, all of the in-person classes have been canceled. Robin and Juliana have been holding down the fort. They still go into the office, and you know, they've been working through all the member renewals and engagement with sponsors who, you know, they've invested money and sponsored the society's activities, and we've kind of rerouted them to some of our virtual events and different advertisements on our website, and hopefully our inner podcast that's coming up. I think Robin will touch on that as well. Let's see. So the annual meeting, obviously that was postponed to September, and now that's been canceled indefinitely. We'll see what happens in 2021. So that's kind of up in the air currently for next year's annual meeting. We do have a lot of CPE offered virtually online. So go check out our CPE calendar on our website. There is a discount for all of our members to take advantage of. So if you are searching for any kind of CPE, please go to our website first to see if you can benefit from that discount. The annual tax forum that we have with the New Hampshire Bar is going to be virtual as well, and that's going to happen over 2 half-day morning sessions, November 19th and November 20th. So that registration is live on our website also. That'll redirect you to the New Hampshire Bar website to register. So sign up for that. There have been many creative things that our society has done to keep member engagement virtually, obviously. So there was our first virtual trivia night that happened with the Maine Society, and I think that was a success. It was pretty fun. And we also held our first virtual student career fair last Friday. Instead of having students come in to meet with firms, it was all done virtually. So that's kind of cool. And lastly, I want to give a shout out to all of our board members who really stepped up. The Commissioner of Education for New Hampshire, Frank Edelblue, he reached out to the society and asked if we can support a student who is in high school. They have a new initiative called the New Hampshire Career Academy. They take applicants who are in high school, like their junior, senior year, and people who need funding to go to college or a associate program. So we have one student who applied to get into the accounting program at Great Bay Community College, and he asked us if we could support that initiative. Based on our decreased revenue this year so far, the society itself wasn't comfortable funding that. So we actually reached out to our board members and past presidents to see if they would be willing to personally or from their firm contribute to this initiative. And within days, we were pretty much fully funded, and it was really, really awesome to see how engaged our members are. So I wanted to shout out huge thank you to everyone who contributed. And if anyone on this call would like to contribute too, we're still accepting donations. So great, that was all I had. I'll give it to Robin.
Great, thank you, Nina, and thank you everyone for participating on this call and for people who listened in. I think it goes without saying that virtual is the word of the year for many of us. It's really been an interesting time professionally to pivot as we have, but I'm really proud of our organization and our member support and that we did it so quickly. And, I'm sure you can all appreciate many of our vendors as well had to pivot, and some of the instructors had to ramp up pretty quickly to move their live educational courses to virtual. And it seems so far to be pretty seamless. I'm sure we'll still have some challenges along the way, but everybody's been really wonderful and very supportive, and I'm thrilled that we've really been able to maneuver pretty well. A couple things I just want to touch on. As Nina mentioned, we did have to cancel some of our larger events that sponsors pay for. They've been wonderful to say, credit us for next year, or we'll participate in different ways. We were this week, however, able to put on our first live event, which was golf. So it was kind of nice. It was outside. It was in partnership with the New Hampshire Women's Bar. And that's one of the ways that we've really been able to continue our visibility is partnership with other professional organizations. And that's been a benefit to them as well. So it's really a win-win on both sides. And in so many ways, I think we all needed to just be outside and just breathe a little fresh air and a little normalcy into all of our crazy lives. And it was a really great event. So everybody's all signed up for next year. People are feeling positive. So really, really happy that we were able to at least do that before the weather changes. So the one last thing I want to mention, as Nina touched on, we've always tried to be very innovative here and look forward. And, again, which is why our pivot was pretty seamless for most part, because we already knew that a lot of our classes were going online. So what we are launching, and we're going to do this next month, is podcasts at the Society. We've been talking about that for a while now. I think the timing is perfect. We're probably a little behind the 8 ball in the sense of how many podcasts are out there. But for a small organization and society as ours, I'm really thrilled that we've been able to follow through with this. And we're really excited to do it, and our members are excited, and our committees are excited to participate. I think it's going to be a great opportunity for many of you to perhaps, talk about some of your areas of specialty. And, there's probably not going to be a challenge of content, whether it's talking to the commissioner or Joel about the AICPA or all the gossip at the legislative branch from Teresa, among other things. So for those of you on the call, if you have any interest whatsoever in participating, please let me know. Having said that, if you have also any interest in a certain topic that you'd like to hear more about, and I think it'll cross the gamut, not just with professional and taxation, but I think for also our younger professionals, the networking, the social aspect, the business ethics, the etiquette. I think there's a lot of topics that we can cover and make it fun and make it so people want to come and listen to us, as many do. So we're looking forward to it. And so stay tuned. We're launching that next month, and looking forward to another great year. Come on, vaccine, right? So having said that, looking at time, we're coming in right under. I love finishing early besides, rather than going over. So does anybody have any last minute questions for any of us, any of the panelists or myself? Wow, we did that well, huh? Great. Well, again, thank you, everybody. Commissioner Joel, Teresa, Nina, it's an honor working with you. I love working with you all. And all our members, thank you so much for your support. We really appreciate you.